Hey guys, and thank you for coming back to our channel, Move with Mike, michaelglass.com, where we hope to help you make great financial decisions about your investing. If you enjoy our videos, please hit the like and subscribe button down below to help us with our channel. As always, we'd like to start off with our disclaimer, and our disclaimer simply says we're here for educational and informational purposes. Any decisions you make are solely your own responsibility. Trade at your own risk. So, again, this is our weekend update. We're going to look at the economic calendar. We're going to look at the charts of some of our market leaders in gold and crude. And then we have an education spotlight at the end. Let's, as we always do, start off with our inspirational quote. And it simply says, "Life's not about waiting for the storm to pass, but learning how to dance in the rain." And, um, you know, given what's going on with our country, we will get through this as a country. We will unite. We will move forward. And I'm sure we will be better for it on the other side. But in your investing, it's not about waiting for always the best situation. Sometimes I kind of refer this back to what we talked about last week, and that is you have to be willing to take a loss. You have to be willing to take some heat. You have to learn to be comfortable in the rain, in the heat. Every trade that you're going to have is not going to simply enter and go to your target. It's most trades. Well, first of all, we all want our trade to at least go in our favor. Nothing like being getting in a trade and immediately goes against you. But even if it does, or even if it's not doing exactly what you want, you have to learn to be comfortable in that ebb and flow, in that back and forth, and give the trade room to run. I can't tell you how many times I've moved my stops to break even and then boom, it goes off. So you have to learn to be comfortable in the ebb and flow to allow yourself to get to the rainbow of the on the other side of the trade. So when we look at what happened in the market this week, we saw all three major indices ended up for the week. Obviously, we had the great day that was Friday. And we can see again the Nasdaq is now up 7% for the year, and the S&P and the Dow Jones are just about there to being positive for the year. So the market really has, for the most part, retraced those COVID-19 fall. Gold fell 3% this week, but it's still up 10% for the year. Crude is up 10% for the week, still down over 40% for the year. So, again, the markets are continuing to rally over the economy recovering from the COVID-19 as the lockdowns continue to end. And of course, yesterday we had a surprise job creation on our jobs number. They're expecting millions of jobs to be lost for the month of May, and instead they posted a millions of jobs created in the month of May, and the market just took off of that. Um, when you look at it, the government, in reaction to COVID 19, has injected $3 trillion into the economy. The Fed has increased its balance sheet over $7 trillion. So, the government has done what it believes is best to save the economy. Now, the question is, does the stock market equal the economy? Many economists will tell you, many people will tell you that, many average Americans are not like you watching this video and do not have money in the stock market. So just because the stock market has come back past where it was when COVID-19 started, doesn't necessarily mean that the economy is great or that the everyday person is great. So it's still going to be interesting to see what happens now, especially as we go into the summer. But again, as these businesses open, as these restrictions are lessened, and more people can come back to work, it's certainly way great for our country. So again, the big thing this week was the jobs number. In that jobs number, it said unemployment is now down to 13%, and it's hard to be happy about being down to 13%. But the surprise job creation was what it was all about that really moved the market. So this week, we don't really have any key earnings this week. There's some restaurants, AMC Theaters that has earnings this week, and that's going to be interesting because there's rumors about Amazon wanting to buy AMC to change the distribution of movies. You know, being able to buy movies now on Amazon Prime the day to come out at home versus going to movie theater. So there's a lot of rumors about Amazon wanting to buy AMC. AMC, is one of the companies rumored to not come back after things are fully lighten, and we can go back to 100%. Um, and there's, there is some more retail, some more restaurants, hospitality things. Again, they can speak to the state of the consumer. But I really don't think earnings are going to move the market this week. What's going to move the market this week? FOMC on Wednesday is going to be the big thing. You got some CPI data early in the day, but 2 o'clock the Fed's going to come out, and we know when Fed chairman speaks, the market listens. So we'll see what happens on Wednesday. Let's pull up the charts and take a look. Okay, so as we start off by looking at the S&P 500, we have been talking about this little swing high at 3112 for a little bit here, and look, we have now, it's just one day, but we have closed above that. And we talked about earlier about the market being, yes, the S&P 500 being down 2% for the year. And you can see if we can get up here to this 3270 level, we'll be retracing most of our we can go back to January and see that's where the top of it was. So we're close. Is one day acceptance into this next zone? That's for you to decide. But you can see this great move up we've been on. You easy could draw another uptrend line right here. We could take this trend line here and bring it on over really now, and we'll see what happens there. But obviously the S&P 500, Nasdaq. I don't usually look at the Nasdaq, but let's pull that up real quick. Oops, my bad. Look at that. Beautiful, right? There's our swing high, and we're up, barely above that. So Nasdaq really has been leading that. Just to draw it, let's take this and draw it up there. There you go. And trade it over to our horizontal line. So Nasdaq fractionally above that again is one day acceptance into a new level. Not really sure. Um, I really think whatever the Fed says on Wednesday is really going to be our catalyst to either keep going up or maybe get a pullback. Let's go to gold. Gold, this is that channel we've been talking about, and where are we now? We're at the bottom of that channel. This is where the buyers come in, and again, you can see these wicks down here. Buyers coming in around 1675, bring it back up. So this is a place to be considering going long on gold if you believe, um, especially if the dollar is going to continue to weaken. This is definitely a place to be interested in getting long in gold, at least while we're trying to trade this zone. Crude has finally crossed above a key level. We have gotten above 35. This is that gap down level. There's crude. Now we've got 3 or 4 days accepting above that level. So you can certainly say it's accepted there. And you definitely want to watch this gap level. So $41, I'm rounding up, is certainly the next level you want to watch because that's where we gap down from. Right there. Okay? Now let's go to our leaders. Facebook, kind of going sideways. But here's where the buyers are coming in, so definitely want to watch. You might have missed it on Friday. Everybody missed along on Friday if you didn't get it Friday, but you can see buyers coming in at 223. Check out Apple. You want to talk about the Nasdaq setting new levels there. Look at Apple above the last swing high. Apple's doing some strong things. Clearly, you got to wait for a pullback before you get into that. Amazon sideways, but now it's sideways at the top of the level. Definitely want to watch what's going on at 2500. Very nice. Netflix sideways towards the bottom, so there might be some longs. We have it down here at 390, but you can see the wick spires start coming in a little bit above that, and you can see the low volume node that's right here at 400. So really 400 is what you really should be watching if buyers come back in. And finally, Google. Google has been the weakest of all of our leaders. It has not accepted into the new zone, but if we do finally accept it into the new zone, you got this gap down level right here to be watching. Okay, so for our education spotlight, we're still going to talk about order flow, but now we're going to look at the dome. So, what should you do when you come to a key price level? And basically, you want to watch the pace of the tape. Is the pace increasing? Usually, when the pace starts increasing and that's showing interest, that's showing people want to be getting involved, that's typically when you see a key price level broken. We see a breakout. If the pace of the tape is decreasing, if it's slowing down, that's showing a lack of interest, and we may see a reversal. Also, some people like to watch orders. Are people coming in, adding orders in at that price level? And again, if they're adding orders, that means, and this kind of goes against the whole increasing part, but if they're adding orders, what does that mean? That means absorption. That means that they're going to defend the price level and try to force a reversal. If they're pulling orders, they kind of get out of the way, and they're trying to let the price go right on through. So it's important to watch the dome to get an idea of, as we come into a price level, of what might happen. Nothing's guaranteed, but again, typically, if you're starting to see price increase, if you're starting to see the pace increase and orders flying through, that usually is a better indication of a breakthrough of that price level versus price slowing down. That typically shows a reversal at that price level. So, you guys know we're working our resources for you guys as you guys are coming out of COVID 19. We're working on our trading other people's money, and we've got our videos out about that. The second video is out where we do a direct comparison of Earn the Trade and Top Step Trader. And we're still waiting. We're looking for your guys' feedback. What stocks you want us to do? You make the call about. You give us the stocks, and we will give you a technical analysis and a fundamental analysis about whether or not you should be long or short. Again, put some comments in the bottom of the video and let us know which ones you want us to look at. So we're getting our trading room ready. michaelglass.com/go/room, and you will get an email when we're going to do that. It's going to be free to start, and we're helping people pass their combines or gauntlets. Again, we recommend Earn the Trade, michaelglass.com/go/earn. Get your funded account, and they're doing a great program right now of the $99 50K gauntlet. And if you're looking to get great education, Trader Research Group is a great group to go and learn about order flow. Move up with Mike on most of our social media platforms, learning truths about money on Facebook, and we're going to get ready to start our Discord channel probably in the next weeks or two. It's going to be in conjunction with the trading room. Thanks, guys, and I'll see you next time.